All right, let's get some insights on the news that's shaping markets. For that, we want to welcome in Jeffrey Small, President, Arbor Financial. Jeffrey, good morning. It's good to see you. All right, I want to get your thoughts on, you describe the current economic climate as bipolar. What exactly do you mean by that?
Well, we've been on this tariff roller coaster ride, and it's been rather terrifying. And so we get a little bit of a reprieve. Good news in the EU, the market rallies before the correction. We get good news on China, 90-day reprieve, and the market rallies. And so we're kind of in this ebb and flow, but we're really codependent on the tariffs and what the outcome of that is going to be. And so unfortunately, we just have reprieves right now, Diane. There is no solid news yet on deals coming down the pike. And until that happens, we're going to be in this yin-yang, up and down, bipolar world of stock prices, which have dramatically exacerbated the beta on some of the best stocks out there. Unfortunately, that's where we are until we get this worked out. And hopefully they will get it worked out.
So, Jeffrey, let me ask you this, because the image that comes to mind when the way you describe things is a seesaw. So I picture us going this way, then back this way, or actually maybe we were this way and then going back this way. So how should investors navigate the swings, especially when we think about both price action and even sentiment? Because, for instance, we got that consumer confidence bounce back yesterday.
Well, I think we're in a market now where really it's a true trader's market where you're buying the dips and selling the rips. But with some of my picks that we're going to discuss today, Diane, we may not see them drop from here, even if we head into uncertain economic times based on what's going to happen after the close this afternoon. And so, they have to be very cautious at this time, especially if you're concerned about retiring or you're getting close to retirement and you're going to count on that money to develop income. You want to be close with your accumulation mindset, because there are going to probably be some more bumps in the road, more volatility in the second half of the year is coming.
Okay, Jeffrey, speaking of your list, I know you got a few key names that people will know well. They're members of the Mag 7 on your list of picks. You've got NVIDIA, you've got Tesla, you've got Meta on those. How are you, approaching those right now? Since especially you describe this market as a buy the dip, sell the rip. What's your approach first up for NVIDIA?
Well, it all depends upon what the report says today at 4 o'clock. We're at maximum value. NVIDIA's up 57% from the low of April 2nd. They are a leading economic indicator for the market at this time. And so if their earnings are above expectations, it'll be good sentiment for the market. It'll carry the Mag 7 stocks in the AI sector higher. But if they are down worse than that, we've got problems, Diane. There could be another sell-off. And so I consider the sell-off a buying opportunity. And so most investors, if we are lucky enough to see more dips, should be looking at nibbling on these stocks and adding more to their positions, because if we get a dip, it's a gift.
Okay, and then what's your bar for a successful earnings report from NVIDIA?
Well, anything above, let's say, 10% to 15% above expectations in terms of their net earnings, if they can improve that much and they can give us a very, let's say, positive or bullish outlook on their earnings growth from here, because we know what was going to happen this year. We weren't going to see a lot of growth in revenue from NVIDIA. All the growth was going to happen next year. And if they can exceed that expectation, then it'll be very good. My own expectation is they're going to be around 15 to 10% quarter over quarter growth from here, which is about par for the course. And that's kind of what we're expecting at this time. Anything above that is a gift. It does not mean the stock will rally, since we're really at a new peak again in NVIDIA in terms of from the bounce that we've had from the beginning of April.
Okay, and let's talk about the next pick on your list. You've got Tesla in focus. It's made quite the recovery over the past month. It is still down year to date, and it's been an underperformer among the Mag 7. But again, it's made quite the recovery this past month. What about Tesla do you like now?
Well, granted, they're losing money on their cars. That number is growing, but you can't ignore that they are the greatest AI story on the planet. Self-driving robotaxis, if they take hold and he can master that, have an 80% margin in an environment where he can take over the taxi industry. And if that occurs, that's why the price is up. It's going up. It bottomed out at 221 on April 2nd. It's up to 361 today. That's the only reason the stock is going up at this point, because it certainly isn't going up because of the auto business. Besides the fact, Diane, that most of the major pension funds in Europe and many stateside sold off Tesla due to the political aspects of Elon Musk's dabbling with the Trump administration.
Yeah, look, it's been under pressure. That's one of the reasons. And, I don't know if you caught this. There was a CBS interview with Elon Musk, and it seemed like he was kind of upset about the spending bill. He sees it, he says, I think a bill can be big or it can be beautiful. So now it sounds like he's, potentially picking a little bit of a fight with President Trump. How do you parse through that? Because often, again, to your point, the way the share price of Tesla recently this year has been viewed is partly through a political lens.
It really is, and unfortunately, that's the realm of the world that we live in. But I really think that, I'm with what everybody else says on Elon getting back to business, getting out of the governmental side of Doge, being enough of riding shotgun with President Trump, which is great for his influence and what he's trying to do, because he is one of the smartest creators, the smartest producers, the smartest men on the planet. And I'm sure that they've taken advantage of that. But he really needs to get back to Tesla and refocus on the mission here of getting this company into the stellar realm of AI. And I believe that he's on that mission again. I think he's refocused and rededicated himself, and he is going to cut the cord from the governmental influences that he's exerting right now, Diane.
Okay, and then I'm curious to know your thoughts on the last pick on your list, Meta. The opposite of Tesla, it's been the outperformer among the Mag 7 and has outperformed the S&P 500. Why do you still like it?
Well, I like Meta for the same storyline of their fundamentals. Their fundamentals are very strong. 3.5 billion people on the planet. They're incorporating AI in all of their platforms. They're mastering that. They're going to monetize that. And I think you've got to make that a core portion of your portfolio going forward because of the fundamental side of the picture. And so that's really what draws me to them, besides the fact that they are really slightly underpriced compared to most of the Mag 7 stocks. And by the way, the last time I was on, I confused FANG with Meta. Going back to the database here in my brain didn't work.
Oh, yeah.
But yes, on the Mag 7 side, they're very, I know we talked about that, it's funny. But we had on the Mag 7 side, they are priced very competitively, and I consider them a strong buy at this time. I don't see Meta's earnings less than 20% year over year for the next 12 to 18 months.
Okay, and I appreciate your perspective because obviously I've been around long enough to remember the acronyms. So there was FANG, and then there's Mag 7, and my colleague Nicole says it should be Mag 7 Plus because there are some that say there should be at least one or two more that are within the Mag 7, but then it just becomes exponentially longer. All right, that's Jeffrey Small, President Arbor Financial. Jeffrey, thank you for joining us this morning.
Thank you, Diane.